Okay, welcome back. So we'll get to the figures. So first of all, we said turnover, and I told you that turnover is just a fancy name for sales. And if we want to find our sales, we have to go to our trial balance here. Now, what's important here and what you need to get a grasp on is, remember, our assets and expenses go on the debit side and liabilities and gains go on the credit side. Now, that is a rule for learning the sides in ledger accounts, but it also counts for trial balances as well. So all of these here are on the debit side. They must refer to assets and expenses, and over here on the credit side, these must be liabilities and gains. Okay, so the first thing we're looking for is sales, to put as our turnover, and you can see we've a purchases and sales figure here. Now it doesn't tell you which is which. Just by looking at them, you should see that the sales figure should be bigger than the purchase figure, or else your business is in trouble, really. But sales is kind of like, we could treat it like a gain on the credit side. That's why we know that's sales, and this is purchases. So 1221, that's the figure we're going to put in over here. Now I'm trying not to keep it too far away from it. 1221. Okay, it's the first bit done. Cost of sales. Now, as I said, we are going to do the cost of sales down here, and this is how you should do it in future as well. Just a little COS I'm putting down for cost of sales. We'll do our workings and we'll see what should go in there. Well, it's the normal stuff that goes in there, really. We start with our opening stock, don't we? And what's our opening stock here? It should be in the trial balance, and your closing stock then should be down in the additional information. So opening stock, it looks like 70,000 here. So start with this 70,000. Okay, plus purchases. We already saw that there was purchases here somewhere. Where is it? 700,000. So plus 700,000. Okay. Less closing stock. So where's our closing stock? I said it's usually the first item in the additional information. Stock at the end of the year was valued on a first in, first out basis, 72,000. So less closing stock minus closing stock, 72,000. And then there's usually at least one or two extra little bits. And what I would say is, this is new to you, so it might seem like there's a lot of extra bits and pieces here, but quite often these things are repeated from one question to the next, so you'll get used to them very quickly. So if we look at part 2 there of the additional information, it says the patent was acquired on the 1st of the 1st 2003 for 80,000. It's being amortized over 10 years in equal installments. The amortization is to be included in cost of sales. So is to be included in cost of sales. So what this is a patent, if you like, is kind of like a copyright. So if you come up with a new invention, if you patent it, you go to an office and you get a document saying, I came up with this invention, nobody else can manufacture whatever this is that I've invented, only I am allowed to do it for a certain number of years. And then if you do that, and you have this piece of paper that says you're the only person who's allowed to manufacture this wonderful new invention, well, that piece of paper, that patent, is valuable. It is an asset then of your business. It's worth something. So just like fixed assets, where we depreciate them, where they go down in value every year, we depreciate patents also. But instead of calling it depreciation, we call it amortization. So when we say here that the patent is being amortized, we're really saying it's being depreciated over 10 years. It means we're writing down its value, or we're depreciating it over 10 years in equal installments. So why do we do that for patents? Well, if you come up with a new invention today, and it's a wonderful new invention, of course it's valuable. But as time goes by, other people come up with other new inventions, or they copy yours and make it slightly different, I suppose, to avoid running foul of patent law. And so your invention is not as valuable as it was when you first came up with it. So that's why we depreciate it. So if we look at it was 80,000 was the patent, and I should say as well, it says the patent was acquired on the 1st of the 1st. Sometimes somebody else comes up with the invention, but you can buy the patent off them, which gives you the right to do all this manufacturing or creating whatever their invention was. So it was acquired for 80,000. You bought it for 80,000. You're depreciating it over 10 years. So 10 into 80 goes 8 times. So that's 8,000 every year. And that's being written or being included in the cost of sales. So let's add it onto our cost of sales here. plus 8,000. And so it is an expense, really, but instead of subtracting it in the less expenses part, we're just going to subtract it. It's going to reduce our profit by adding it to cost of sales. So it has the same net effect on our profit at the end of the day. So let's total that up. 78, and that's 706, isn't it? You'll double check these figures afterwards. Anyway, 706. So all we do is we put it up here. Cost of sales 706, and if it's anything we're subtracting, we put a bracket around it. Okay, so sales less cost of sales gives us our gross profit. So subtracting that there, it's gonna be 515, isn't it? Okay, so 515,000 is our gross profit, and the next thing we're going to do is we're just going to calculate our distribution costs and put them in there. Our administration expenses, this is our less expenses part, and we're going to get a figure underneath. Okay, so let's do those two if we can. So the next one is distribution costs. Okay, so down below I'm going to do another working for distribution costs. Now this is quite a short one, but ordinarily you could have 3 or 4 or 5 things in distribution costs, but in this case there's not a whole lot. So let's have a look down through here. Again, a good knowledge of the different sides is very important here, because you need to realize that expenses or costs should be on the debit side. So really this is where you're looking, and I know the name should give it away as a cost, but sometimes it doesn't. Like for instance, where we have discount here, where we have discount, it doesn't say discount received or discount allowed. You must know, because it's on a particular side, what kind that discount is. Hold on now. Oh, actually, I think I was looking at the wrong. The discount is 6260 rather than the 23,000. So if it's on the credit side, it must be a gain. So it's discount received. If it had been over here, we'd know that it was discount allowed. It was an expense. Okay, so and there are other examples as well. For instance, rent. We don't know if it's rent receivable or rent payable without looking at which side it's on. Now let me just have a look down here. I think that's the 29,000. I'll have to get my ruler in a second. But either way, whichever one of these figures it is, if it's on the debit side, it's an expense, isn't it? Okay, so let's have a look at the distribution costs, and there are only 2. In this case, we've got advertising there, because as I said, distribution costs, if you think of it as sales and distribution costs, anything that you incur to try and increase sales or to distribute your product goes into distribution costs. So advertising, 23,000, that's our first cost here. We'll add it to our workings, 23,000. Okay, and I said already, our other one is, like, what you should be doing is running down through all of these to try and see if there are any others, but there aren't. I've had a look at it already. Excuse me. So the next one is just your delivery van depreciation. So we see we have delivery vans up here at cost 140,000. Let's look at how we depreciate delivery vans down here. Where does it say it? Oh yeah. Depreciation is to be provided as follows: delivery vans at a rate of 20% of cost. So 10% of, what did we say it was, 140,000 is 14, so 20% is 28,000. So 28,000 is your depreciation on delivery vans for the year. And that's it for distribution costs. That's 51,000, isn't it? Okay, and so we put this 51,000 up here. Okay.